Friends, in this video for ithought Advisor, I am going to talk to you on the topic getting timely advice. If you are one of those who came into the stock market in 2020 or decided to look at equity with more seriousness at that time, everything that you did in that year would have worked well. There are times when the stock market is so favorable that anything you do will be a success. It's like picking a dart and throwing it at the board, and however you throw it, you still hit your target. Stock market gives you such times when you hit the bullseye without any effort. Timing is your friend in such situations. But most of the time, timing is not our friend in the stock market. So, in times when it's not easy, which is most of the time, you will still need to invest, you will still need to scale up, you will still need to sell some parts, you will still need to move to safety, you will also need to move from safety towards a more aggressive investment stance. So, the investment stance will always need advice on where it should be and where it should move towards. Success in the stock market must not make us think that investment stance is a walk in the park, because it's extremely nuanced. That is why most of the people who came in 2020 saw a lot of success in 2020 and 2021 are now wondering what to do. This phenomenon is not just restricted to mutual funds, which people have experienced on their own and bought some funds based on the marketing spin that was given in 2020, which convinced them very easily. Only a set of funds which were performing well at that time got heavily subscribed into in that year, and it was past performance driven. But subsequently, people have been continuing to put money into the same funds, which is our usual habit, and are finding today that many of those funds are not living up to the hype which they noticed at the time they invested. So, they made some money initially for the first year, and then subsequently things are changing. This phenomenon is also happening in some of the portfolio management products. But investors are still not sure which way should we go. Should we move on and go to something else, or should we just stick to what we are doing and wait it out? Both strategies may work, but not at the same time. In my opinion, if you have bought very expensive companies or portfolios comprising very expensive companies, it's going to be a very long wait back to decent profits. So, you may not make returns for a significant period of time, and then returns may come to you when everybody else tires out. Is it really worth waiting in a place where you have overpaid when you invested, and as a consequence of that, you are not getting returns? You have to understand that the reason you are not getting returns is that the product has a habit of overpaying. It's like an individual who always spends more than he earns. Such a person cannot save. Similarly, an investor or an investment manager who always overpays for his investments, let's say he buys stocks above the valuation at which they must be bought, will always end up not creating decent returns. This is the experience, and nothing is going to change it. But we believe stories and we believe in what we are told, and we expect that simply because quality is purchased, it is going to give us returns. Experience is entirely to the contrary. Now, this is what you need to bear in mind today when you are moving from the bull market of 2020-21 towards a long, slow bear market that the world is moving towards. So, you need to be very precise, you need meticulous advice. First, you need to know how to deal with the investments you have made in the past. You must deal with those investments on merit and sensibly. You cannot afford to blindly wait and think that a miracle is going to bring you back to profits. The next thing you need to do is understand the emerging economic scenario and get advice which will guide you correctly going forward. It's no use saying that something worked well in the past, because the economic context of the last 10 years was very different from the economic context that we are heading into in the next 10 years. In the last 10 years, you had inflation coming down. In the next 10 years, you're going to have inflation going up. So the investing has to be very, very different. This is something which everybody must weigh in your mind and then come to a conclusion as to what kind of investment, what kind of advice, and what kind of investment strategy you need going forward. That in essence is very, very important for every investor at this point in time, and you need to get the right advice at the right time to get the right investment outcome. Thank you for watching this video.